All right, I think we're going to go ahead and get started. Um, if everybody in the back there can find a seat, we'll have some people filing in and joining us. But I don't want to start off the meeting by putting us in the hole as far as our schedule is concerned on the very first day. So we're going to go ahead and get started. Good morning. My name's Tom Oliverson. I'm the insurance chair in the Texas House, and I'm also the NCOIL Vice President. I'm going to be moderating this general session today, which is session number 2 in a 3-part series that we're doing on the topic of environmental, social, and governance issues. And so for those of you that were not here at our spring meeting, we covered the environmental aspects, and today we're going to be specifically focusing on the second letter of the trilogy, which is the social aspects. Before I turn it over to our distinguished panelists today, I just want to sort of make a few remarks, and then I know my colleague and co-chair on this committee, Assemblywoman Hunter, would like to say a few things as well, but I want to emphasize a few points, and that is that when I first came to NCOIL, I used to tell everybody the great thing about coming to NCOIL is that we never ever talk about anything that's even remotely partisan. Everything is, 100% of the time bipartisan, everybody agrees, it's just good policy, it's just good insurance stuff, and that's what we work on. I understand, and I think most of the lawmakers here understand that this particular issue tends to sort of violate that rule in a certain respect, and I think my colleague is probably going to emphasize the fact, and I agree with her, that part of that may be because of failure to fully understand what exactly ESG is. But as a ground rule, I want to say that as we have touched on this topic in the past, everybody comes here with their perspective on this, and sometimes passions get a little bit high, but I'm just going to kind of remind you that we don't want to say anything inflammatory or over the top or anything here. With this purpose of this panel is not to create model policy. There is no model policy for ESG, and based on what I've seen in the states and the directions that they're heading on this, I don't think it would be possible to come up with an overarching model policy. More likely you would come up with model policies moving in different directions, because that seems to be the direction our states are going. However, it is important for all lawmakers to understand what ESG is, and so as much as we can provide information to you and to educate you and give you an opportunity to hear from experts in the field about what the E and what the S and what the G means and what it looks like and examples of it and examples of maybe the absence of it and various things like that. That's the purpose of this meeting. It is not to create policy. We're not creating policy here. We're not talking about creating policy here. We're doing this solely from an educational perspective to help our members, particularly our lawmakers, be more educated about what this topic, which I doubt there's anyone in the room that hasn't heard of it, what the topic of ESG really means and what it looks like moving forward. So with that, I'm going to turn it over to my colleague, Assemblywoman Hunter, for a couple of comments, and then I will introduce our panelists and we'll get started.
Good morning. Wonderful to see all of you here this morning. We have a huge crowd, so I love to be able to see active participation first thing in the morning. We're getting right after it first thing. We did have a great session on the environmental portion of ESG at our spring meeting. As Representative Oliverson did mention, there is no policy, there is no model. This conversation is out there in our universe. It's happening in all of our state houses. It's happening at business meetings around the country. It's incumbent upon all policymakers to understand what this means and what it could mean for businesses and constituents in our state and, potential policy in any state going forward. We have had very respectful conversations, even though sometimes we don't agree on this topic, and it really isn't about agreeing or disagreeing. We're just trying to put information out there for all of our participants participants. And in the insurance space specifically, there are organizations that do participate in getting ESG ratings, and that's real and that's happening. We are legislators that are carrying insurance models in our state. We are legislators that want to make sure, sound policy is happening for the constituents and businesses in our state. So again, it's wonderful to be able to convene a topic like this, even though it may be slightly controversial, but it's always important, as we've done with every general session, this just happens to be 3 meetings instead of 1, that we always have conversations about current topics, and sometimes we just leave it there and don't have any additional conversations, and sometimes it leads to other more deeper dives into conversation. So I'm proud of our legislator members who have been participating in this conversation space respectfully, and I look forward to the information that the panel is going to be providing today. Thank you.
Thank you, Assemblywoman Hunter. Appreciate your comments, and I'm honored to be able to co-chair this with you. At this time, I'd like to introduce our 3 panelists, and then we will directly head into their presentations. I should say before I introduce them that our 4th panelist, Mr. Roosevelt Mosley, who is a principal and consulting actuary at Pinnacle Actuarial Resources, unfortunately had some travel difficulties and is not able to be with us, so I apologize for that. But it is the summer and the American airline industry is what it is, and you know how that goes. With us today, we have Sridhar Manyam, who is the Senior Director of Industry Research at AM Best Rating Services. We have Evelyn Boswell, who is the Director of Diversity, Equity, Inclusion at the National Association of Insurance Commissioners. And we have Stuart Carruthers, who is a partner at the Canadian law firm of Stikeman Elliott and, left the last word off. I'll let you say the last word here in a minute. Okay. And so at this time, we're going to go ahead and get started. And so, Mr. Manyam, we're going to start with you, if that's okay. Go ahead and share your presentation with us. The floor is yours.
Hello? It's good? Excellent. All right. Hello and a very good morning to all of you. My name is Sridhar Manyam, and I'm thankful to NCOIL for giving AM Best the opportunity to present its views on an emerging subject matter that is on the headlines almost on a daily basis. As the legislator pointed out, ESG is a topic that invokes passion, and views have been formed on the subject for or against. And I always refer to Dale Carnegie, who said, "No one wins an argument." So let's keep an open mind about ESG. Globally, different stakeholders are trying to understand what exactly ESG is, how to best craft policies around it. So it is an evolving subject. For example, MSCI, which provides index services, defines ESG as the consideration of environmental, social, and governance factors alongside financial factors in investment decision making. They also say that the motivation for considering ESG could be integration, values, and impact it has. The Corporate Finance Institute says that ESG is a framework of how an organization is managing risks and opportunities related to environmental, social, and governance criteria. Gartner, which is a consulting firm, says ESG refers to a collection of corporate performance evaluation criteria that assesses the robustness of a company's governance mechanisms and its ability to effectively manage its environmental and social impacts. Examples of ESG include quantification of a company's carbon emissions, water consumption, or customer privacy breaches. So different stakeholders have different objectives when it comes to ESG. Institutional investors, stock exchanges, and boards increasingly use sustainability and social responsibility disclosure information to explore the relationship between a company's management of ESG risk factors and its business performance. So again, the point I'm trying to make is there are different definitions, different stakeholders, investors, regulators, customers, rating agencies, ESG score providers, the government, each one with a different objective and hence could be a different definition. With that in mind, when it comes to AM Best, we are looking at ESG from a perspective of financial strength. Our main, our main objective as a ratings agency is to provide a relative opinion of a financial strength of an insurance company and its ability to pay claims to its policyholders. That is the reason for our existence, that is our mission, and we look at ESG factors from that perspective. And just as a note, we have looked at these so-called ESG factors even before the term ESG was coined. For example, the third letter in the ESG, governance, is something that we have always looked at from context of enterprise risk management. How strong is the board's oversight? What kind of information and metrics are they looking at? Do they have the right group to analyze this from different perspectives? My fellow presenter, Evelyn, is going to talk about the different perspectives and how they lead to better decisions. So we always look at it from how does this ESG factors affect the financial strength of an insurance company and its ability to pay claims. With that in mind, when we define ESG, we call environmental factors related to resource use, pollution, climate risk, energy use, waste management, and other physical environmental challenges and opportunities. For example, when it comes to environmental factors, we don't know the reason, but the last few years we've seen a huge increase in the frequency and severity of natural catastrophe events. And insurance companies are in the business of protecting policyholders from these environmental and climate-related risks and disasters. How are insurance companies making sure that they have the money to pay back their policyholders when these events happen? That is an important question that we have to ask the insurance companies, and the insurance companies, more often than not, show us the results of their stress testing exercises related to catastrophes and prove to us that they have the capital to pay back their policyholders during times of climate-related disasters. Social factors, they relate to how a company interacts with the communities in which they operate, their suppliers, employees, customers, and broader stakeholders, and how they manage the risks that are coming out of these social factors. So for example, in this day and age, in this of increasing technology adoption, we have seen that there's been a huge proliferation in the use of data. And as insurance companies use this data in order to make sure that they are pricing their insurance policies appropriately for the risk that they insure, we want to make sure that they are good stewards of data because they are collecting huge amounts of data. We want to make sure that that data is being appropriately protected. Customers' private and confidential information is not being leaked outside. And the way they use the data is within the legal and regulatory framework that the insurance commissioners and insurance laws are written. So we want to make sure that these social factors are taken into account when it comes to insurance decisions. And governance, I already talked about, it relates to procedures and processes according to which a company is directed and controlled. And we've often seen examples, thankfully, outside of our industry, for example, FTX, We've seen Enron long back, where bad governance can lead to immediate destruction of a company's reputation and result in complete and abrupt failure that could cascade onto other companies and industries as well. So this is what we mean when we talk about ESG. And we already talked about ESG factors. The environmental factors refer to the physical risks, that is, the physical properties that the companies insure or they invest in. What kind of risks do those risks have in terms of environment? Transition risks. So transition risks usually are referred to as risks when the asset that the company owns or insures is no longer legal and therefore could lose value in an abrupt manner. Liability risks, as insurance legislators and insurance audience, we know what kind of liability risk like asbestos and environmental pollution that insurance companies have to insure and make sure that they pay in order for the cleanup costs or for the healthcare costs and so on and so forth. And stress test failures. This is if there is another 3 hurricanes that hit Florida or Texas, do companies have enough capital in order to make sure that the policyholders have been can be paid for? So we ask insurance companies to perform these stress tests, and any failure could result in a financial strength rating downgrade or change in the financial strength rating. On the social side, where we are emphasizing right now, demographic changes. This is really important to life insurance companies. As the population gets older, the opportunities and risks for annuities and pension funds and other important things, other important retirement and protection products and health insurance products definitely increase, and there are opportunities that these insurance companies can take advantage of in order to provide more protection and help close the protection gap for our citizens. Product liability, this is more, I would say, an investor who is very concerned about how products that the insurance company insures are being made. Are they being made using child labor or in conditions that are not really conducive for proper working? So, or in countries where these conditions might not exist. So these are companies like that are being. These are the questions that the new demographic is asking the companies. Are you making these products properly? And if you're insuring the product, maybe you have some secondary exposure to this. Social inflation. This is an issue that AM Best is very concerned about, and insurance companies are also very concerned about. Insurance companies can insure weather. They have the expertise to do so by using capital, risk management techniques, and reinsurance. But social inflation is what we define social inflation is the fact that the legal and the court system is awarding exceedingly punitive damages, and the trial lawyers are taking advantage of the loose laws in order to create an abuse of the court system, resulting in more and more expenses for insurance companies. And on top of what we are seeing in the regular society economic inflation, the social inflation is adding to the burden. And insurance companies have reasonably good economists in order to predict and manage how economic inflation is going to play about. But social inflation is something that's very unpredictable. And unfortunately, if you're pricing for a loss cost of $10, and because of the social inflation, that $10 becomes $20, you have not priced your policy, you have not reserved enough money, and this creates a lot of consternation and adverse reserve developments and capital impacts to insurance companies. So that is something that we are keeping a close watch on how insurance companies are managing this. Data privacy, I already talked about data privacy. insurance companies using a lot of data? How are they using it? Are they using it appropriately? Are they protecting that? In addition to that, insurance companies also insure a lot of corporations that are using data. So cyber insurance is becoming a much bigger part of the insurance pie. And how are insurance companies managing cyber risks? That's also part of this, part of our inquiry. And I already talked about governance, corporate governance, more transparency, a good, diverse board composition, and adherence to business ethics are all baseline. And we've seen that, corporations that don't adhere to it are definitely facing issues with respect to their stock price or with respect to their very existence. And again, emphasizing, ESG is relevant for us, for AM Best, when it has a visible impact on financial strength. A positive ESG attribute, for example, a company comes to us during a management meeting and tells us we've eliminated all printers, or we are using recycled paper, so on and so forth, is great. But just because you have or our building is LEED certified, all of that great, but just because you have these positive attributes, it might not have an impact on rating unless you can prove to us it translates into a better financial strength. And as I said before, it's not a new concept. It has long been part of AM Best's credit analysis and is captured in our rating opinions. And we capture that in a variety of ways. For those who are not familiar with our rating process, the first thing that we look at is the balance sheet strength of a company. Does the company have enough cash and assets on its hand in order to pay back its policyholders? That's our first question where we start from. The balance sheet strength is the critical aspect of AM Best ratings. And that, when we look at balance sheet strength, we are looking at how the amount of assets that the company has, amount of liquidity it has so that it doesn't have to sell these assets in times of distress. But we are also looking at climate risk in the sense, does the company have enough cash to pay during a 1 in 100 catastrophe event? That is a catastrophe event that is so severe that it happens once in 100 years. Unfortunately, these 1 in 100 events are becoming more common, and they are happening every year, which is the unfortunate truth about probability and statistics. And how are they integrating ESG in investing activities? Again, to the extent it impacts the financial strength of the insurance company. Just because a company is integrating ESG in their investing activities doesn't mean it's going to be a positive unless we can assure ourselves that those actions are resulting in enhanced financial strength. Operating performance, we talked about social inflation, and the other thing I'm sure Stuart is going to touch about is ESG-related litigation. These days, ESG-related class action suits and activist investors getting involved in companies' management decisions is becoming more common. How are the companies handling these kind of ESG-related decisions? And how does that impact a company's bottom line? So first, we look at balance sheet, and then we look at operating performance. Because if a company is making a profit, then it's going to have more money, and it's going to be able to pay its policyholders better. But if a company is constantly losing money, it's going to keep depleting its surplus, and it's going to result in erosion of its financial strength. And business profile. Business profile is how a company is managing its market position. How is it adhering to changing demographic? How is it protecting its data, reputational risk? What kind of underwriting exclusions does it have in terms of ESG-related risks, for example? If a company feels that there's going to be increasing severity, is it increasing the deductibles? Is it making sure that some kind of severe threat is being excluded, so on and so forth? So those are the four factors that we consider: the balance sheet strength, looks at the amount of capital that's available, operating performance, looks at whether that company is eroding or adding to its capital, business profile, whether it's maintaining its market share and market position, and enterprise risk management, which is how is the company managing all of its risks, aggregate risks in a appropriate manner, making sure that it's not having too much concentration in one area or too much concentration in a certain area of investment, so on and so forth. And the last bullet point, again, that's our stand. We don't make a judgment regarding the ethical value of a company's ESG activities or ESG credentials. We are not an ESG scoring company like there are other services that offer. We don't make any judgments regarding that. And this slide talks about ESG impact on credit quality. It's really not uniform, right? I mean, different ESG factors can have different levels of impact on different lines of business. For example, on the governance side, my eyesight is a little weak, so I have to refer to my slide on my screen. Yeah, thank you. Governance is important for all companies, whether you're a property casualty company, a life insurance company, a health insurance company, or you're a company in emerging markets. Climate risk, as we see, is very high on the impact scale for property casualty companies, given that they insure properties. Social inflation is also scoring reasonably high. And environmental liability, for example, it's scoring a little bit lower. That's because we know that P&C insurers have a long history of, have learned the lessons from asbestos, environmental liability lawsuits, and they are managing these impacts pretty well. These days, there are some small liabilities like PFAS, which are these forever chemicals that are creeping in, but I think they are still very early, and insurers have enough wherewithal to manage this liability efficiently. On the life insurance side, we talked about changing demographics, which is very important on how the life insurance companies are providing products to this aging population. And life insurance is also asset intensive, so therefore investments score a little bit higher on the life insurance side. Climate risk is important to the extent of the investments. Do they have too much concentration of commercial mortgage investments in a certain area? So those are the kind of things that we'll see when it comes to climate risk when analyzing life insurance companies. And, so, I mean, this is more talking about environmental. We can call it, we don't know the reason, whether it could be El Nino, it could be climate risk, whatever it is. We've seen that there's been a huge increase in billion-dollar events that have affected the US from 1980 to 2023, and it's been increasing, and therefore it's a risk that we want to make sure that insurance companies manage appropriately. And every single risk, I have the next 3 slides. I'm going to leave this to you as a reference and allow time for other panelists to speak as well. But in general, the way we assess every single risk is through our framework, which is looking at balance sheet strength. How does reputational risk, for example, in this slide, affect a balance sheet strength? Is that leading to investors not giving capital to this company, and therefore the company might not have enough capital? Operating performance. Is the reputational risk causing a huge loss of customers to an insurance company, and therefore it's going to lead to a loss in earnings? Business profile is its ability to attract new customers. And enterprise risk management. How does the company manage enterprise risk management? And we already talked about social inflation. I'm going to leave this slide with you as reference, but happy to take any questions on this. And same thing with corporate governance. And I already talked about the social factors that AM Best considers. And again, this is something that we've talked about: data privacy, human capital, product liability, stakeholder opposition, how does the company have a good strategy for handling social media, stakeholder, activist, investors, so on and so forth.
Okay.
And I'm going to,
Yep, that's great.
Yeah.
That's great. I don't want to cut you off, but I do want to make sure we give equal time to everybody. So when we're going to hold all questions to the end. So at this time, I'm going to turn it over to Evelyn Boswell from NAIC to give her presentation.
you can take this.
Oh, take this one? Okay. Thank you, panel member. Hello and good morning, and thank you for the invitation to come and share with you about what we're doing at the NAIC for diversity, equity, and inclusion, and how it is that we're supporting our members. I always count it a privilege to speak with people leaders, legislators, our members, our staff members who are leading other people, business owners, to talk about diversity, equity, and inclusion. So let's start off with why do we have DE&I and why does it matter? Well, we found out through research that it's more accurately representing our customer base when we have a workforce, a workplace that looks like the people we serve and support, or the potential customers that we could serve and support. So we say at the NAIC that diversity is more representative of the world we live in. So diversity provides a wealth of differing thoughts and ideas. We want to make sure that people know it's not about just race and it's not about just gender. However, we are glad to have our leader, Deborah, as president of the NCOIL. We're glad about that and the history that it affords us. But we ought to see that it's also about different thoughts and ideas. What are we bringing to the table? Who's missing from the table? I think Will earlier said, if you're not at the table, you're on the menu. Well, I want to say, who's invited to the table in the first place? Right? And are they deciding what's on the menu? So that's what diversity is for us. It also combats the Great Resignation. Diversity is an inclusive environment that fosters belonging, supports empathy for others, and increases team building and more positive relationships among colleagues. We certainly have seen that in our engagement scores at the NAIC. They've gone up, and we've been a diversity division at the NAIC since 2020, September of 2020. Diversity increases employee satisfaction and retention, and it makes employees feel more connected, work harder, and feel committed to the organization for the long haul. I don't know if you remember, but Gallup used to have an engagement question that said, do you have a best friend at work? And at first I thought that question was a little strange. Why would it matter that I have a best friend at work? Well, it matters because I have someone I can talk to, I can go to if I have problems. Sometimes I don't want to vent publicly, so having someone that I can share my issues with who's lived an experience like I've lived, maybe they're the ones to check me before my manager or supervisor checks me. So it's always good to have a best friend at work. And also, your teams are more innovative. Businesses rich in diversity innovate faster due to a diversity of thought and experiences. The last bullet I wanted to share why DE&I matters is that higher profits. It's been proven, and Harvard Business Review showed that businesses with more diversity report 19% higher revenue than less diverse organizations. Also, companies in top quartile for gender, race, and ethnic diversity are 25% more likely to be more profitable. This just isn't from the Harvard Business Review, but also, as I mentioned, Gallup, McKinsey, Pew, Baines, other researchers. So, I want to share a little bit about you. I thought I would be facing the crowd, but if you're someone who was hired and you've got in the job and found out that you have more than just one hat that you're wearing, raise your hand. Yeah, I figured that's me, right? So I got in on the job, like I said, September 2020, and I was told that I would be the NAIC director. Come to find out, the NAIC has 56 members, so I also wear a hat to support the members. So internally, for the NAIC and the 500 plus staff that we have there, I create the strategy for diversity, equity, and inclusion. I help to implement and lead the DE&I initiatives there at the NAIC. I lead the DE&I efforts, and I train the staff. So that's internally. It was only about 2 weeks when I realized, oh, you have to support the members as well. And so I'm the subject matter expert for DE&I for our 56 members, and sometimes even their staff who may call me. We help model the DE&I tools for diversity, equity, and inclusion that we implement at the NAIC. So what I share is that for the NAIC, they're my guinea pigs. I think of something that is great for our culture that we need to do to move the needle forward for DE&I. Within the NAIC, I said, let's implement this for 2023. We try it out for the NAIC. When it's a success, I share it with the 56 members. And I let them know, this is what we're doing and this is how it was done. You can do it too. Now, what if something fails? Well, I'm not perfect. And some things do fail. And when it fails, I'm transparent enough to say, you know what, this is what we tried at the NAIC. It didn't work for us, but here are some suggestions that it may work for you there in the States. So that's my role. I stated that I planned the strategy for DE&I at the NAIC. And there are 4 things that we follow to ensure that we're following strategy and not just a harebrained idea that was on the news in a commercial or that I dreamt up. We ensure that the strategies that are implemented, the goals that we want to adhere to, support our workforce, our workplace, our members, and our community. We want to ensure that for our workforce, we're striving to attract, retain, develop team members of diverse backgrounds and skill sets. For our workplace, we're looking to strive to create an inclusive and diverse work environment that promotes a sense of belonging for all team members to be their authentic selves. For our members, we're looking to provide support to commissioners, directors, and superintendents to broaden awareness and include DE&I in our industry. And for our community, as you know, we have 3 offices, Kansas City, New York, and DC, but since we support the entire nation, for our community is the nation. We collaborate with local and national organizations that serve marginalized communities to help increase awareness, advocacy, engagement. I don't do this by myself. I have to give credit that we have a 13-member diversity council. These members are employees of the NAIC, and they're at all tenures, at all levels of employment with the NAIC. So they're full-time employees who have their ears to the ground. They have their ears alert to staff meetings, to ensuring that there is a DE&I agenda topic, usually once a month in their staff meetings, to talk about what's going on. When I share that I don't do this by myself, I think at your tables, at your seats, you may have 2022's annual report. We put out a 2021 annual report after our first year in office. This past year, 2022, I consider that like a Bible, if you will. It truly is. This is what we've done at the NAIC. It's a handbook for you to look at and say, you know what, if they did it at the NAIC, this is how we also can use those same initiatives at our departments of insurance. So we pass those out to our members to ensure that they know, 1, it's a marketing tool, but also it's a measurement tool. Here's where your decision to have DE&I at the NAIC, this is what's happened. This is what the engagement is. This is the mark of performance and success. And like I said, you also can have a book club. You also can have, you all may call them lunch and learns. We call them NAICU exchanges, where once a month we talk about cultural competency. Even our members get on the call and talk about where it is they came from and the barriers that they had to overcome to be the successful people that they are. So that's our diversity council. We decided to have an award even, that our staff nominate other staff members for the diversity leader at the NAIC. And there are certain things that you have to be or have to show and behave to be the diversity leader. You have to advocate for change and awareness. You have to participate in our corporate events. You have to value and respect diverse points of view. I believe Dr. Oliverson mentioned at the beginning of the meeting, respecting each other's opinions. We may not all think alike, and that's obvious that we don't. We have different points of views, but we need someone to facilitate those points of views and share those. It doesn't mean that you clam up. We want to hear from you because we value your opinion. Now let's get to a resolution as to how we're going to resolve it. And so that's what the council help us to do. So I mentioned we share with our with our members across the country, and that top picture you may recognize some people, but we have now at our national meetings, at the NAIC national meetings, DEI leadership breakfast meetings. And I've said to my CEO that I'd like to have DE&I present at every national meeting that we host. Why? Because like you see here at NCOIL, there are many people who join and show up at the national meetings. So if that's where the population is, I want to be in front of the population discussing DE&I. It is not a secret for us at the NAIC as to what we do. So in Seattle, when we go to the national meeting in Seattle, we will be having a diversity breakfast. I believe it's that Monday morning, August 14th at 7:30. I know that's early, but you start with breakfast, and the presenters, the panel, will start at 8 o'clock. You're invited to show up for as many seats as there are in the room there in Seattle. We welcome you. Our first panel was with the females of the NAIC who've risen to the highest ranks of their states for insurance, Department of Insurance, and we had them on a panel to talk about their barriers, and they gave great insight as to how others, not just females, could rise in the insurance industry. I'm glad to say at the NAIC, we have like a 51-49% female ratio at the NAIC. So we've created also regulator coursework for the members. So we announced last year that there's a tutorial from our education department that just shares basic DE&I principles, like what's the definition of diversity, equity, and inclusion, but it also provides for them different ways in which to learn. As I mentioned, all of us come from different backgrounds, and me as an older adult, I need things presented to me 7 different ways, 7 different times, so that I can understand what the principles are. And that's what we tried to do in this regulator coursework. We shared with the regulators in Unit 1, Understanding Diversity, Equity, and Inclusion. In Unit 2, Cultural Proficiency, Understanding Awareness and Competency. And in Unit 3, Diversity, Equity, and Inclusion in the Workplace. Now, these regulators are asked to take this course. It's about 7 hours, and we give them about a month to do it. It's a 7-hour course, and at the end of every unit, after Unit 1, Unit 2, and Unit 3, there is a quiz. And so this quiz, you have to pass by 70%. Once you pass Unit 1, 2, and 3, you're given a certificate. You're getting credit-worthy credentials for your regulation courses. So this is really good. I just wanted to share with you that usually we don't get feedback like this, but I wanted to share that this is part of our measurement, that as of July 3rd, we had 465 people to register for this particular course, and like I said, we just launched it February of this year. And from that, our current course rating, on a scale of 1 to 5, with 5 being the highest rating, as of the last of June, we were rated 4.2 for this particular coursework. And some of those comments were, it's my best course yet, and I learned from it. This course is very useful and provided many tips I plan to use in the future. I found the course to be informative and engaging. I feel I have a better understanding of the subjects addressed. Another comment, this was an amazing course. I learned a lot. And this course was presented in a fresh format, was interactive, and used multiple teaching methods. It focused more on learning the concepts than memorizing words. Thanks to the NAIC for offering this course. I look forward to continuing our DE&I journey together. I like that last quote because DE&I is a journey. This isn't something we're going to have finished. by the end of 2023. I stated earlier that I plan out our strategy for the NAIC. At the end of 2023, we will have come to the close of my 3-year strategy, but then I get to, again, plan a 5-year strategy with State Connected. So that was the regulator coursework. I also want to state for the regulator coursework, I didn't do this by myself. Again, I am not perfect, and I can't think of 3 units to put together in a coursework for all of the 11,000 plus regulators that we have. I used the members to put together this coursework. Every jurisdiction has identified a diversity leader. So I pulled together those diversity leaders, and I asked them for volunteers to help me put together this coursework, basic coursework for the regulators to know, so that, one, we're all speaking the same language. We talked about not knowing what ESG is, but I want to make sure that we all have a definition, a glossary of terms for diversity, equity, and inclusion. As you all know, it's fluid. Things change as we look at the news, as we read other reports. Things are changing all the time. Let's have a groundwork, a foundation for what we're going to talk about as to what DE&I is within the NAIC. So there are some history-making events. One, there's DE&I at the NAIC, right? But there's some other history-making events, and that is for our insurance summit. Some of you may get notices and invitations to appear at our insurance summit. When I came in 2020, I was first asked to provide information for the Insurance Summit for regulators who come, again, for credits, for certification for the regulators. I didn't for the first year have a credit course, but I do want to share with you that last year we did. We had 2 courses that were credit worthy. And again, this Insurance Summit in September, I'll have another course that's worthy of credit. So the first Insurance Summit, we had someone you may have recognized, a former NAIC president, George Nichols III. He introduced insurance, inclusion, and equity, bridging the wealth gap. So that was received very well. Last year, we had 2 presenters. The History of Black Banks in America by Tim Todd of the Federal Reserve Bank of Kansas City, and Confronting Hard History, Best Practices for Talking Effectively About Race and Racism with Dr. Hassan Kwame Jeffries of The Ohio State University. So, other history-making events, when we had the interim director from Greenwood Museum in Tulsa, Oklahoma, appear on our Lunch and Learn, our NAICU exchange, to talk to us about Black history and what happened in Tulsa. One of our employees, who's in the room, and I won't call any names, but said, you know, we ought to take a tour of the Greenwood Museum in Tulsa. She put it together, and we did. We took a tour. Over 30 people from Missouri and the Oklahoma Insurance Department joined us to take a tour of Wall Street, Black Wall Street in Tulsa, and also the Greenwood Rising Museum. And that was fantastic. When you're talking about breaking away and getting to where people are and learning their history that people in Oklahoma didn't know about, the race massacre in Tulsa, it was eye-opening. But also, you get to understand real people who needed insurance at that time in 1921, who were denied insurance at that time. So that history is important. What we're living today is important. So we believe breaking out of the brick and mortar building, getting to where diverse people, diverse thoughts are, is important. So that's what we're doing, and that's what we will continue to do. And of course, our 3rd annual DE&I conference was just held this past June in Kansas City, with our highest number of people attending the conference. Over 500 people were in person. We had a total of 624 people. That included 65 people virtually attending the conference. It was magnificent. Pictures will be out on the NAIC website if they're not already. Our keynote speaker at the time was John Quiones of What Would You Do? It was fantastic, and I hope to invite all of you to next year's DE&I conference. Again, a full day of learning about DE&I. So important to the NAIC that we had our New York and our DC office come and join us in Kansas City. When you talk about DE&I, you have to put the resources into your talk. It was important for us to have our staff members in person to be there to learn about diversity, equity, and inclusion, and indeed they did. So, of course, our last picture, our last year's photos, people you may recognize at our previous two DE&I conferences, and we invite you to ask us more about DE&I at the NAIC at the end. Thank you.
Evelyn, thank you very much for your presentation. At this time, I'm going to turn it over to Mr. Stuart Carruthers.
Thank you very much. Great to be here. Thank you to NCOIL for inviting me. I really liked Evelyn's slide that had the Diversity Council graphic of what looked like sort of a group of people holding arms or with their arms interlocked in a ring. I got to show that around. But great to be here. Thank you very much for inviting me. I'm an insurance regulatory and compliance and M&A lawyer in Toronto, Canada. And I work in Canada with many, many of your sponsor companies whose logos are in the materials, and work with them and their Canadian operations. I attend the NAIC often, and so follow the U.S. insurance sector and developments in the U.S. as well. But this at the NAIC, I'm usually in the back with the audience rather than kind of being up here at the table facing the attendees and the legislators. So nice to be here. I did a panel with your President Tom earlier this year, and after the panel he said, you know, I think it would be really great if you could come to our next NCOIL and talk a bit about ESG and what's happening in another country, where things are more advanced, less advanced, and kind of what's going on, just as an educational perspective for the attendees and the members. They might find that of interest, and would you be interested in doing that? So I said, absolutely, would love to come, and great to be here. I didn't prepare slides. I thought I would just sort of more conversationally talk a bit about how the insurance sector works in Canada and the laws in Canada, and then talk about ESG. When I'm presenting in the US, I sometimes have silly slides in which I have lots of pictures of Celine Dion and Justin Bieber and all the Canadians you would know, Ryan Reynolds and William Shatner, but I decided I would just kind of play it straight for this presentation. But I did like the Minnesota commissioner's remarks at breakfast, and she was describing things in Minnesota, which all sounded very familiar to me. And she said, you know, welcome to Minnesota. I was making notes, she said, we're the North Star, we're friendly, we have a lot of lakes, we have some extreme weather events, and we have a lot of auto theft. And that also describes Canada. So I feel very at home being in Minnesota, and my Canadian accent sounds a bit like a Minnesota or a Fargo, North Dakota accent, so feel right at home. Sorry about all the smoke this summer in the Northeast and the Midwest and the East Coast. We'll get to the E and ESG in a moment, but yes, we're having this terrible, truly unprecedented wildfire season where there are these hundreds of basically burning out of control wildfires by satellite every day, and so that's the reason for the smoke. Sorry about that, and hope that clears up. I thought it would be useful if I just spent a couple minutes just talking about how the insurance sector works and is regulated in Canada, so that you see the sort of where things are in ESG context. And ESG, as a general premise, ESG is relatively far advanced in Canada and relatively embedded, and we're sort of closer to where on the topics generally, just sort of greatly generalized, but relatively far advanced. So in Canada, just in the insurance sector, we have a mature, quite sophisticated, heavily regulated insurance sector. Very high capital requirements overall, about the highest capital requirements for insurance carriers in the world. We have a divided regime in a single, I'll pull this a little bit closer, a single national prudential regulator, so a federal Canadian government agency, which we call OSFI, the Office of the Superintendent of Financial Institutions. And then In each of our 13 provinces and territories across Canada, across 5 time zones, we have a local market conduct regulator who's more akin to a state commissioner of insurance or department of insurance. So they do all of the market conduct regulation, and they do all licensing and regulation of intermediaries. So all brokers, agents, adjusters, TPAs, MGAs, and so on are all regulated at our local provincial level. Our federal regulator, OSFI, is a very robust, well-resourced, well-staffed regulator on par with any of the national regulators. Our local provincial regulators run the gamut from some that are very well-resourced and very sophisticated to some that are not so much. Some are akin to a big state regulator and some not so much. We have an English common law system, like in the US, all across Canada, except in the province of Quebec, which is mainly French-speaking, and they have a French to in Louisiana. Canada has its own insurance capital framework for carriers. Canada doesn't follow any of the big international capital standards. We've sort of chosen to, our phrase is mow our own lawn and have our own capital to best protect Canadian creditors, depositors, stakeholders. And in general terms, in the last few years, the regulatory focus has shifted to non-financial risks. So not just prudential regulation, but non-financial, including climate risks, culture risks, governance, cyber and tech protections, and so on. And some of the big state regulators, like the New York DFS, are very into cyber and tech and so on. But that's sort of the trend. On our life insurance side, we have 3 big companies that are our big players that control about 3/4 of the market in Canada, so very consolidated. Manulife is the largest, also owns John Hancock here in the US. And then our P&C industry is very fragmented. Lots and lots of carriers, smaller carriers. All the big US carriers are present in Canada. All the big European carriers, so Lloyd's, Allianz, AXA, and so on, all present in Canada. Very divided brokerage industry, lots of smaller brokers. And on the P&C side, the industry and the coverages are mainly focused on large commercial risks. So energy, infrastructure, transportation, there's home and auto insurance too, but mainly large commercial risks. All the typical coverages you'd think, but also many new lines. So cyber coverages, reps and warranties insurance and M&A transactions, a whole spectrum of cannabis coverages. We have completely legalized cannabis all across Canada, for better or for worse, and so that's fully taxed, regulated, licensed. There's 400 or 500 cannabis stores in Toronto alone. If you're in Toronto anytime soon, you'll see every street corner has a licensed, regulated cannabis store. A couple other aspects that I think are interesting, and then talk about ESG. As you may know, and I appreciate that some folks would know Canada very well and others, not so much. In Canada, we have no private health insurance. So we have a single government monopoly, single payer health insurance system that covers everyone in Canada. And so from a US perspective, that looks sort of much more socialist or more government controlled than you're used to, of course, and I'm sure you know all about single payer health care and so on. On the other hand, for example, there's no rate or form filing for insurance coverages in Canada, other than private auto, where it's regulated. There's no rate or form filing, so that's a total free market kind of system. But we have government monopoly auto insurance in 3 of our big provinces, so we very sort of strong government presence overall in the industry. There's no excess or surplus lines insurance. You're either licensed or you're not. It's sort of an either-or system. Quite advanced privacy and data protection regimes, closer to what exists in Europe. Their big system that you may know is called the GDPR, quite advanced privacy and data protection regimes. And we have roughly the same economic sanctions and anti-money laundering and anti-financial crime regimes as you do in the US. The only big difference is there's no Cuba embargo for Canadians or for Canadian businesses, and there's lots of travel to Cuba. Cuba's a very popular winter vacation destination for Canadians, but otherwise all the same sanctions. So that's just sort of the 5-minute overview, and then to talk about ESG. As I mentioned, the focus these days is more on non-financial risks, so governance, culture, climate risks, and so on. And my main observation that I would suggest is worthwhile taking away is that ESG means different things to different people in different contexts. It has a lot of different components to it, I think, or our experience is. So it includes, climate issues, it includes DEI issues, it includes good governance issues, and they're sort of interrelated, I think, in the sense of, if you thought about, just for example, representation of women on corporate boards, is that a governance issue? Is that a social issue? I mean, it's sort of both. Or if your environmental practices have a particularly disproportionate impact on one social group, is that a DEI issue, or is that an environmental issue, or sort of both? So I think there's a tendency to think of these things in silos, but I think that they're sort of more interconnected than that. And I'll touch on environmental for a moment, although I know you did that at your last session. I'd say that in general, the industry in Canada very focused on ESG, especially companies that are subs of European parents. The European parent groups, English and European parent groups, very far advanced on diversity, net zero emissions, net zero climate change, and so that's sort of where that bus is going. And part of the ESG focus is a reflection of who the customers and the employees and the target audience is for the products. And Toronto, where I'm based, is a very, very diverse city. It's far and away the most diverse city in the world. If you haven't been, please come visit. It's about the same size as Chicago, about 7 or 8 million people on a Great Lake, kind of like Chicago, except very, very diverse, both racially, ethnically, big LGBTQ population. We have a huge Pride Month celebration in June, and the downtown is covered with rainbows and other Pride stuff. So very, very, very diverse. We have some securities laws for public companies that require disclosures. They don't mandate diversity steps, but they require disclosures of steps that publicly traded companies are taking in that area. Some of them are focused just on female board representation, and others are focused more on sort of a broader DEI focus, including Aboriginal persons, LGBTQ representation, disabled persons, and so some of them are kind of focused more broadly. Our federal regulator has governance guidance that speaks to diversity and that encourages the carriers that it regulates to be working towards diversity in their boards and their employees. And I'd say it's taken quite seriously, and both at the board, at the employee level, at the social level. Particularly among sort of the mutual and cooperative organizations, I'd say that the mutual community is in general terms more on ESG than shareholder companies. We haven't had the same type of sort of shareholder litigation and environmental litigation or class action litigation as the industry faces in the U.S. 60 seconds on environmental, even though I know you spoke to that last time around. We don't have any environmental sort of investment portfolio, either divestment, investment or divestment, either sort of prohibitions or boycotts in that area, as there are at many states now in the U.S. Carriers are quite focused on sustainability in their investment portfolios, particularly if they're the sub of a U.S. parent. Where it's been really hard for the industry in Canada has been that we have a large oil and gas industry, and it's been very hard for the big oil and gas companies to get the insurance coverage that they need. There's a real capacity shortage for large-scale oil and gas because many of the big European insurance groups have been pulling out of underwriting, carbon or extraction industry. So that's been a big issue, and we have lots of captives being formed as a way to try to bring capacity into the industry. And my last thought about the sort of the environmental side of it, and our regulator OSFI has climate expectations, climate risk management expectations, is that like the S and the G, I observe that it's driven by the sort of younger half of the employee base within the companies. So the under 30 employees have real expectations about how they want their companies to behave, and being part of a company that is aligned with their own personal values around ESG and environmental sustainability is very personally important to the under 30 crowd, much more than I think it was or is to my older crowd. And so to attract that employee base and to keep those employees happy and engaged and motivated, these ESG initiatives are a very important part of that. Even if there was no direct financial benefit, just from an employee engagement and satisfaction benefit, that's very important too. But let me pause there. Thank you again for having us, and I'd be pleased to talk about any of that.
Great. Stuart, thank you very much for your presentation. Members, at this time, we're going to take some questions from legislators, and we're going to begin right over there. Carl? And if you want a particular member of the panel to answer the question, please direct that to that member of the panel, or just say if it's open, anyone can comment, and we'll try to take as many questions as we can, because I think this is the best part of this is what we want right here. So we'll start with Carl, and then we'll move around the room here.
Thank you, Mr. Chairman. Thank you. My mic is not staying on. Thank you, Helper. I'm going to direct this question to Mr. Stewart, since he started us off, and he was genuine and very into it. And coming behind Ms. Boswell, you had to do something to make us laugh. But you said some key stuff, so this question is directed to you. When you talk about issues of mandate, it always, gets you very much into a debate, Today, we will be discussing some health issues in our committee. Some model legislation that requires insurers to cover biomarker testing under certain circumstances. So in the case of ESG mandates, can it be argued that the decision should be left up to the company to decide whether they want to invest in certain areas or implement certain policies?
I think so. Again, just coming at it from a Canadian perspective.
Before you answer that, I just want you to know that Beyonce is in town tonight.
She is in town tonight, yes. Yes, we should all be at Beyonce tonight.
And so that means I need a quick answer.
Yeah. I mean, I come at it from a slightly different perspective of living in a national single-payer healthcare system. So, and that system's not perfect, and it has a bunch of issues, and there's long waiting lists for a bunch of things, and so there's lots of issues with it. But I mean, I think we start from a proposition of providing basic minimum health care to everyone, and then we leave the rest to the free market to do. So anything that's not basic minimum health care, including vision, dental, prescriptions, chiropractic, massage, physio, like all that stuff, is covered by the industry, and that's not regulated. Many people have it through employment benefits. So I mean, my sort of take on it, or where I come from, would be, if it's a sort of practically an essential service or has a particularly sort of DEI impact to it, then our view would be that should be covered, but otherwise you would leave it up to the industry. We also, a sort of a related topic is we also have legislation dealing with genetic testing and the extent to which health insurers can, like life insurance insurers, can obtain and use genetic information on applicants and policyholders. And that's very strictly regulated because there was a concern that could be used in an unfair way or it could be used in an abusive way. So there is some regulation about it. I'm not as familiar with your sort of the biomarker issues and considerations around that, but that's sort of knee-jerk reaction.
Representative Cheney?
Thank you, Chair. My question is for the first gentleman. You mentioned, Mr. Manheim? You mentioned social inflation. Can you define social inflation versus inflation?
Sure. Economic inflation is what we define as how it affects the overall citizens' purchasing power due to it's a monetary phenomenon driven by the amount of money and the purchasing power of money. While social inflation is a feature that is unique to the insurance industry, where during a legal that relates to the increase in the number of legal filings and the fact that the juries and the courts these days are prone to awarding more punitive damages to insurance companies and corporations because they feel that because of their attitude towards these corporations have increased. The other factor that that's also leading to social inflation is this increase in the introduction of a new asset class called litigation funding. And by litigation funding, what we mean is there's a group of investors who are looking to make money by going to courts and suing insurance companies and corporations and resulting in profits to these investors. And in fact, I read in Bloomberg that the litigation funding is yielding higher returns to investors than hedge funds and other kind of private equity investments.
Senator Teese?
Thank you. I have two questions, if I may.
Sure.
Has to do with the regulator coursework that you were talking about in the 3 separate sections. In order for us as legislators to better understand the priorities that our regulators are going to be coming and interacting with us on, is it possible for us to get that coursework so that we understand what's going on there?
Oh, I thank you for that question. I've been asked that before, and it is on the books for us to consider. We've talked about it in our senior leadership meetings that for this, DE&I to go further, that would be the next step. So, as I said, this is basic foundation. We want to give it a year to see. We only had 465 so far take the course. Let's get the bugs out, and then we'll see how we can broaden it. But thank you for that question, because I certainly will bring it back up in our Stay Connected meeting.
So, quick follow-up on that particular one. Didn't you say that legislators were invited to some of these presentations?
Our members are invited to take the coursework.
So it's just strictly members, got it?
Yes.
Understand.
Thank
Okay.
you.
Thank you very much. My second has to do with the environmental approach, and I don't know to whom this should best be addressed, but the escalating costs are true, so then the questions happens, like, where are they coming from? So that has to do with how many of us go to the grocery store and are paying at least 40% more. Pretty much everybody, so costs are going up dramatically. So that bumps it into the billions of dollars higher than where it was previously, just solely based on inflation. So cost of goods and services, we have an increasing population. So if you're just looking at how much is being spent, more people are purchasing insurance, more products of insurance are being provided, more things are being insured, so all of those things go to escalate the cost. So you can't just have a direct, we had this much before and now we have this much, so therefore it's the environment going insane. That's not a fair assessment of the scenario. So if you're going to be using that, you need to use the algorithm and not the equation in order to better figure out what the actual causes are associated with it. And I would certainly appreciate if you could, as you're bringing this forward, put it in better context. And so just as a point, like in California, I used to live there, when they wanted to clear forests, not clear them completely, but clear them of brush and scrub and maybe cull some trees because they were too thick, we had environmentalists that would get really upset about that. And then you'd have a forest fire that would not only take out the entire forest, it would take out all of the homes that are in that forest. So you end up with, and this is true where human intervention is either causative or the solution for the problem that we have, that we're facing, but that's not global warming, that's human intervention that could be corrected with that. And so when you're talking ESG, are you looking to, for example, better allow the management of forests?
So we're not making policy decisions, but what we are, as we are analyzing the increased wildfire frequency and the severity of the wildfires, we do recognize that the human wildfire, wild forest interface that we call it, the urban wild forest interface, is definitely a reason that is causing this. As you mentioned, as the population is moving, expanding, and we are seeing increased construction, and that construction is not being planned in such a way that that is leading to a reduction in the wildfires. That's definitely contributing to a lot in the increase in the severity, like we saw in 2017-18, where there were billions of dollars, and the combined ratios of insurance companies operating in California were outrageously high. One of the reasons that we think is that the problem is that particular increased construction without much thought to this, how the forest fires are going to affect the severity. In fact, insurance companies these days, are using wildfire models in order to figure out a particular property and advising policyholders, like you said, to clear some of the scrubs to the distance between the trees and the shrubs and the house is maintained so that a fire does not extend into the residential property. Otherwise, we've seen how a whole town was erased because of wildfires, causing losses. More importantly, it was preventable loss to the citizens, and of course, it also translates to loss for insurers. So having a good mitigating system, prevention is much better than using insurance. People don't buy insurance because they expect to use it. People buy insurance because they think, I might want to use it during an unexpected time. So, yeah, you're absolutely right.
So we get several more people that want to ask y'all questions, so did you get what you needed on that? Okay, perfect, thank you. At this time, Assemblywoman Hunter, you're next.
Thank you. Thank you all panelists for being here today. Thank you, Evelyn, you really drilled down on the S portion of the ESG conversation and appreciate that. My question is for Mr. Menyem. I apologize for, and I want to thank you for all of the legislators who are here. If you see the AM Best information that they left, I think this was very, very helpful in putting into context really basic layman terms relative to what is ESG and the terminology that's used a lot. But my question, we're looking forward, companies are using ESG ratings to formulate policy, but where is this going? Is this a fad? And we're talking about a company, you don't do policy. You give us facts and information. So where are we going with this as we have all of these insurers in the room, we have legislators in the room who are trying to put policy together, thinking how does this formulate what we're talking about in the future? Where is this going, or is this a fad, and this is something that we should not be considering in the future?
Thank you. I mean, unfortunately, I might have to pass on that question just because of the fact as an organization, AMBES, we do not do ESG ratings. We look at all these factors in the context of financial strength. So we do not provide a specific score to an insurance company saying your ESG rating is XYZ or ABC.
So maybe, Evelyn, if you could just very briefly, in your NAIC conversations, because you've drilled down, you've had many, many years worth of drilling down into this. Is this a fad, or is this something that we're going to be talking about for a long time in the future?
The NAIC has not yet made a determination about ESG.
Senator Lang?
I need to interrupt you for a second. Can you?
Is that better? Oh. Did you get the first comment I made? Is that collected? Good. About 130 years ago, when the United States created corporation laws here in America, our Congress, they gave corporations a superpower that never existed in the world before. And that superpower was called limited liability. Before America, if you invested $100 in a company in the world and that company went under, you were liable to that company's creditors as an individual investor. When America put in limited liability, if you invest $100, your maximum loss was $100. And that released investment in corporations in America that the world had never known before, and it led to our economy, or it was one of the main factors of our economy being what it is today and how financially successful America has been. Now, in return for that superpower, our Congress had one rule and one rule only, and that rule was corporations have a fiduciary responsibility to their shareholder, and they must always put shareholder value first. So, and we now have empirical data that shows that funds that focus on ESG investing typically return about a 3% lower rate than funds that don't focus on ESG investing, and over time, compounded, 3% is a significant difference. So my question to the panel is, how, if we focus on ESG and DEI, how is that not in conflict with our United States Code, and why are there attorney generals right now seeking a lawsuit because they're assuming that it is in conflict? Thank you, Mr. Chairman.
Thank you, Senator. It didn't sound like you had did you have a question you wanted to ask them, or just?
Let me restate my question. How is that not in conflict with the United States Code?
Okay.
ESG, DEI. Sorry, I wasn't clear. I thought I was. Sorry about that.
That's okay. Does anybody want to take that one?
Okay, so I'll just say that in 130 years, the United States has changed a lot. That's it. It has changed a lot. Our codes need to change with the people now who are the demographics that represent the United States. As you recognize, and as I mentioned by the research that I have and I named, we have now more women in the workforce. We now have more women in leadership positions. As Stuart mentioned, not as many women in board positions. But if you look at our demographics, they have changed. And with that change comes the other changes. So that's my answer.
And I would just say, as a housekeeping note, that our fourth panelist, who couldn't be with us, was going to present sort of the other side of this issue from an actuarial standpoint. So it's not that we didn't have a sort of whatever you want to call it. I don't know if it'd be bipartisan, but both sides of the issue. It's just that the airline industry conspired against us. So
I've just always enjoyed this debate. Thank you.
you're welcome. Thank you. Representative Carter?
Thank you, Mr. Chair, and thank you all for your presentation. It's very informative. But my question is to the first presenter, and excuse me, I can't pronounce your name, but you brought up something that's near and dear to me when you were talking about litigation for profit. And it's not a question, it's an ask. I'd like to dig real deep into that because where I come from, I'm suspicious that's what's going on right now. So I would really like to meet with you after this, if we have that opportunity, so you can give me some guidance on what to look for.
Absolutely. I mean, we are seeing a lot more of those in lines like commercial auto, where nuclear verdicts are really affecting a lot of these insurance companies. We are seeing a lot of that in directors and officers, and where the fiduciary duties that people talked about were not being applied properly. So more than happy to have a conversation.
Okay, and I think we're just about out of time, but in closing, I was hoping to ask just a final question of each of you. If we could just sort of have the three of you. I would like to know if you think that the social aspect of ESG is circumscribed. I mean, I think we've talked about it, we've heard a variety of testimony, but I'm going to ask if each of you, in closing in 60 seconds, can define the S in ESG, and is there a consensus about what it actually means? So we'll start with you, Mr. Maniam.
Sure. Thank you. And again, before I conclude, thanks again for the opportunities and some really great questions. I learned a lot from the questions as well. And from my seat here as a representative of AM Best, I think the social aspect is probably having a little bit, is moving towards a little bit more consensus. And from AM Best perspective, we are looking at social aspects as the incorporation of data privacy. We think that is really important, and that's really going to grow as insurers and the economy and the technology with ChatGPT and AI increasing the focus on data. The protection of data, the appropriate use of data as a social factor is definitely going to grow, because it's not a question of if the hackers have your social security and credit card number. It's just a matter of if they are willing to use it, or do you have the credit limit so that they can use it. So I think the data aspect is definitely going to grow in importance. The social inflation, we have talked about litigation funding. I think that is going to grow in importance as well. And the DEI, I think it's going to be an important part of the conversation. I'm not sure how it's going to be governed in terms of rules and prescriptive regulations, but definitely it could be a factor in the conversation as well.
Evelyn, same question to you. What is the S? Can you define it in 60 seconds, and is there a consensus?
Again, the NAIC will not make a comment on the S in ESG. We will continue supporting diversity, equity, and inclusion at the NAIC.
Okay. Stuart, I'm counting on you. Tell us what it means.
I think it narrowly refers to DEI type initiatives, how you treat people, and I think it maybe more broadly captures how you treat the communities that you operate in terms of interaction with the community, environmental activities, philanthropic activities, and how you deal externally, sort of outside the company or agency or group. But I think both of those things are sort of most focused on people. I think of the S as being people, and governance is kind of a more abstract notion, and the environment, I think we know what that means, but I think of the S as meaning people. And I liked Evelyn's little graphic of the people with their arms linked together. And I would like to take that away. There you go.
Okay, great. Well, I appreciate the opportunity to chair this robust discussion, and let's have a round of applause for our three panelists for educating us. And that is going to conclude our general session on the S of ESG.